In 2024, Bitcoin is set to experience a seismic shift. The halving will cut miner rewards in half, drastically reducing the new supply of Bitcoin. After previous halvings, Bitcoin witnessed unprecedented surges, a 9,000% increase in 2012 and an eye-popping 2,960% in 2016. This isn't just speculation, it's a trend backed by hard data. The crypto world is on the edge of its seat, waiting for what could be the biggest financial phenomenon of the decade. Think of Bitcoin halving like a digital treasure hunt, but instead of finding gold, we're cutting the supply of Bitcoin in half. Every 4 years, Bitcoin goes on a diet, trimming its new supply, which is kind of like telling a money printing machine to take a chill pill. So let's rewind to 2009. Bitcoin was the new kid on the block, and miners were raking in 50 BTC for every block they mined. Fast forward to the halvings, 2012, 2016, 2020. And it's like Bitcoin decided to go on a slimming spree. After each halving, the reward for mining each block shrinks, dropping from 50 to 25, then 12.5, and now a slender 6.25 BTC. By 2140, we'll hit the grand finale. No more new Bitcoins, just transaction fees for miners. Now here's where it gets juicy. Each time we've had a halving, Bitcoin's price has done a moonwalk, dancing its way up. We're talking serious gains, like plus 385% before the first halving, and a mind-blowing plus 5,089% after. The second and third halvings weren't slouches either, showing impressive jumps in value. It's like Bitcoin throws a party every 4 years, and the price is the guest of honor. But it's not just about making Bitcoin's wallet slimmer. This halving thing is a masterstroke against inflation. Traditional money keeps pouring out of central banks like water from a faucet, but Bitcoin says, nope, we're keeping it tight here. This scarcity is what makes Bitcoin a hot-ticket item, especially when regular currencies are losing their cool with inflation. Now there's a plot twist, knowing the limitations to Bitcoin mass adoption. Will the big financial players jump into the Bitcoin pool now that it's getting scarce? Stick around because we're about to dive into a world where Wall Street meets the Wild West of crypto. This is where the real adventure begins. In the world of Bitcoin, there's something brewing that's got everyone from Wall Street wolves to the everyday Joe sitting up and taking notice. It's the Bitcoin halving of 2024, and oh boy, it's stirring up a storm in the teacup of institutional investments. Let's zoom in on this scene. Bitcoin, once the playground of tech geeks and risk takers, is now catching the eye of the big guns. Think investment firms, hedge funds, and even those family offices that usually stay hush. Hush. These big players are sliding into the Bitcoin party, and they're not just there for the dip. They're in it for the long haul. But here's the kicker, Bitcoin halving. Imagine you've got a golden goose and suddenly it's laying half as many golden eggs. That's what halving does to Bitcoin. It slashes the new Bitcoin creation rate by half. Now, in a world where less is more, this scarcity is like a magnet to investors, pulling them in with the promise of potential price hikes. And let's not forget, these aren't your average Joe investors. These are the cool, calculated institutional types. While retail investors might ride the emotional roller coaster of the crypto market, institutional investors are the Zen masters playing the long game. They're bringing a slice of stability to the Bitcoin banquet, with their fancy risk assessment tools and regulatory know-how. But wait, there's a plot twist. As these institutional giants dip their toes into the Bitcoin pool, they're not just buying in, they're legitimizing it. Each time a big name drops $1 into Bitcoin, it's like a seal of approval, catching the eye of the public and sparking more interest. Now, there's a lingering question. How will this new breed of investors navigate the changing landscape of Bitcoin mining post-halving? Stay tuned, because this story is about to dive into the techie trenches of Bitcoin's digital gold rush. All right, buckle up, crypto enthusiasts. We're diving into the tech-savvy world of Bitcoin mining, and let me tell you, it's more cutting edge than a samurai sword in a tech store. Bitcoin mining isn't just some digital gold rush. It's a high-tech ballet where every move counts. Miners once upon a time used simple CPUs, like trying to dig a tunnel with a spoon. Then came GPUs, beefier and better, like swapping that spoon for a shovel. But the real game changer, ASIC miners. These bad boys are like bringing a bulldozer to the party, revolutionizing mining with their brute force. Now here's where it gets juicy. We're heading toward the Bitcoin halving in 2024, and it's stirring up the pot like a chef with too much caffeine. Post-halving, miners will get fewer Bitcoins for their troubles. Think half-off sale, but not the fun kind. This means they'll have to up their game, be more efficient, more competitive. It's like the Olympics of mining, where only the best will snag the gold. But wait, there's more. This high-tech hustle is a boon for network security. With miners pushing their gear to the limits, Bitcoin's network becomes Fort Knox. Unbreachable, unshakable. Imagine a digital fortress guarded by an army of supercomputers. That's Bitcoin for you. And let's chat about decentralization, Bitcoin's middle name. This whole shebang is about cutting out the middleman, like saying no thanks to the bank teller and doing it yourself. Bitcoin's a rebel, challenging the status quo of central banks and their monopoly money printing madness. It's a financial Wild West, and Bitcoin's the new sheriff in town. But with these technological marvels shaking up the status quo, how will the big financial macroeconomic world react? Will they embrace this digital maverick or try to tame it? Global economic policies, particularly those affecting traditional financial assets, significantly impact Bitcoin. Factors like interest rates and inflation, which heavily sway traditional markets, also have a notable influence on cryptocurrencies. However, the relationship is nuanced. For instance, changes in interest rates can affect the decisions of venture capital firms investing in blockchain technology, indirectly influencing Bitcoin's ecosystem. As we near the 2024 Bitcoin halving, it's important to understand its potential impact against this backdrop of global economic shifts. Historically, Bitcoin halvings, which occur approximately every 4 years, have led to an increase in Bitcoin's price due to the reduced supply of new coins entering the market. This event is crucial for Bitcoin's value proposition, much like scarce commodities such as gold or palladium, but with the added predictability of supply reduction over time. However, not everyone is convinced about the positive impact of the halving. Skeptics argue that macroeconomic factors might overshadow the effects of the halving. Analysts like Will Clemente point to the broader fiscal trends and their potential impact on Bitcoin. Despite a significant drop from its 2021 highs, some analysts remain optimistic about Bitcoin's future, particularly post-halving. They highlight Bitcoin's unique properties such as scarcity and decentralization as key factors in its potential rise in value. Moreover, Bitcoin's behavior in response to economic conditions is noteworthy. It has shown tendencies to act as both a risk-on and risk-off asset, attracting investment during times of rising inflation as a hedge against fiat currency devaluation. The increasing involvement of institutional investors and the development of derivatives markets further intertwine Bitcoin with macroeconomic factors. It's critical to consider how these economic policies and trends may set the stage for Bitcoin's role in broader socio-political and environmental contexts. The interaction of these factors could provide deeper insights into Bitcoin's trajectory post-halving, and you must surely hear that. On the social and political front, Bitcoin is stirring the pot big time. It's like a digital rebel, challenging traditional monetary systems and giving central banks and governments a run for their money. As it grows from a nerdy niche to a trillion-dollar titan, Bitcoin is not just about buying stuff online anymore. It's become a symbol of financial freedom, a way for people to sidestep traditional banks and even dodge government controls. Think of dissidents in authoritarian regimes using Bitcoin to keep their movements alive. But as with all powerful tools, it's not all sunshine and rainbows. Critics argue that this lack of regulation opens doors for the shady underworld, empowering criminal groups and even rogue states. Now let's talk about Bitcoin and Mother Nature. Bitcoin mining is a power-hungry beast, guzzling electricity at an alarming rate. In 2022, this digital gold rush was responsible for about 0.2% of global greenhouse gas emissions and 0.4% of worldwide electricity consumption. That's no small potatoes. The environmental footprint of Bitcoin mining is often likened to entire countries. Plus, the specialized hardware used for mining doesn't last forever, contributing to electronic waste. But here's where the plot thickens. The Bitcoin industry is showing signs of going green. Some regions are seeing more than half of their Bitcoin mining powered by renewable energy. This is crucial, as the 2024 halving is set to slash the mining reward in half, pushing miners to double their energy efficiency to stay profitable. This built-in incentive could drive significant advancements in sustainable mining technologies. Think the Bitcoin halving in 2024 is the only big news. Think again. There's a whole new wave of excitement brewing in the Bitcoin world. Join us in our next video. The next Bitcoin bull market is about to start, where we'll reveal how the upcoming changes could ignite the biggest bull market yet.